Adani Group has released a 400-point report clarifying, denying, and really answering some of the specific concerns which were raised by the Hindenburg Group. Early this morning, which is like 15 minutes ago, in response to the Adani's clarification, Hindenburg has also come out with an explanation where they're talking about the fact that only 30 out of 143 pages addresses issues raised by us. The whole issue, Adani failed to specifically answer 62 of the 88 questions, and it is largely confirmed or attempted to sidestep our findings. They stand by the report, and Adani Group response argued points we did not raise. Sandeep Sabharwal, good morning. Thank you for joining us. What's going on? It is Hindenburg versus Adani, and ultimately market sentiment is getting crushed.
And I watched Pathan yesterday.
So who's going? So what's the takeaway for our viewers based on the news development over the weekend? And I'm sure you must have managed to get a sense of that interaction, what we had, that big exclusive interaction, what we had with Robbie Singh. Where do you think Adani Group of stocks are headed today?
I think PVR and Inox will do well. Adani Group, I'm not sure what's going to happen.
Well, what's your view? I mean, generally, if you have to put facts, technicals, and everything together.
I think, Nikunj, there has been in the back of the minds of people questions around the spectacular rise of the Adani Group. So I think that always happens when someone rises up so much at a time where established companies which have been around for so many years have not been able to do that. In industries which are not exactly technology driven. So I think it's always possible for a technology based company to discover a product which becomes so successful that it becomes a multi-billion dollar company. So that happens all the time in, let's say, soft asset companies. For a hard asset company to rise like this, for the same kind of assets which this group owns, to trade at a 5-10 times multiple to very similar assets trading owned by other promoters was always a question. Now, there might be reasons for that, which I'm not aware of. It could be because people think they'll grow much faster than others, they'll take market share, so whatever might be. So I think those were the lingering issues. You look at mutual fund holdings of Adani Group companies, you'll see hardly anyone owns anything. So why is that that mutual funds don't own anything? So I think there are several questions around it. It's very tough to predict where these stocks will go. And I find it very tough to evaluate these companies, the reason why they go up and down, the reason why so many companies are hived off and listed. So I don't like this bull market game of continuously hiving off companies, demerging, listing new companies, etc. I think group should focus on performance, not financial management. I think that's the reason I don't buy. Now, I might be wrong or right, I don't know.
From a market sentiment standpoint, Sandeep, if the FPO goes through, the management is confident it will go through, what do you think it will do to the market sentiment? Because on Friday, there was nervousness that, if this large mega fundraise from one of the biggest corporate groups in India, if it fails, it just will kill the India premium, the positioning of India story. If the FPO sails through, what will happen to the market sentiment?
First of all, Nico, it does nothing to the India story whether this FPO goes through or not, because the ownership of Adani Group companies among institutions is very, very limited. So to that extent, saying that this impacts India as a whole or this is some sort of attack on India, no, I think it's totally wrong. And I don't believe in that. I believe that India's story is pretty well placed given our growth, inflation dynamics, how the corporate sector is doing, the kind of government initiatives on spending, etc., which are there. So I don't think those things change. However, in the short term, if the FPO doesn't go through, then it does have a negative impact both on sentiments as well as on Adani Group companies. So that's one part. Secondly, if it grows through, it will be good in terms of removing some sort of risk from the group because they so although the CFO was saying they're generating huge cash flows, actually the debt has been going up and they are investing much more than what they are generating. So to that extent, they need the money. And since they need the money, if it goes through, at least that the financial risk and contagion risk on the overall market will come down.
In fact, as we speak, there's been another retort by Hindenburg Research, and they've tweeted saying that our reply to Adani is that fraud cannot be obfuscated by nationalism or a bloated response that ignores every key allegation we raised. They've, of course, been talking about the January 24th report, which they released, outlining numerous issues of suspected fraud at the Adani Group, to which, of course, Adani came out with an over 400-page report just yesterday, and they spoke with media as well, as you heard our interview at 8:30 a.m. just a short while back. But anyway, while that continues to be a mystery, we're going to find out whether this morning there's any recovery in sight or not for the Adani Group names. But I want to also bring on board Shivangi Sarda and find out, Shivangi, hi, morning, whether there's going to be any recovery for the markets per se.
Good morning. Thank you for having me. So we've seen that there has been a lot of volatility. Even India VIX shooted up around to 18 zones, and we've seen a lot of wild swings in the market due to the, of course, Adani event and the union budget that we're heading into this week. So of course there will be some sort of a bounce, but I believe there is overall broader weakness in the market, and the bounces could be utilized as a selling opportunity, and the market could see a little bit of more weakness from these zones. Even if we saw the bank nifty, it shedded around 3,000 points last week. So clearly there is a more weakness in even in the banking index, which would drive the overall market sentiments a little weaker.
All right, 2 days to go to the big event, but in the meantime, we're tracking a whole host of numbers as well. Lots of earnings that the street is watching out for. Today, incidentally, as well, it's a busy day on the earnings calendar, and we've got a whole host of numbers, the likes of Bajaj Finserv, Tech Mahindra, L&T, as well as BPCL. Sandeep, wanted to get in your thoughts on L&T because we're expecting that this time around, the large orders that the company has received is really going to aid the company all in all with their overall order backlog. What is it that you're working with when it comes to L&T? What is it that you want to hear out from the management later this evening?
So I think given the fact that L&T has outperformed so much, so it's important for the company to actually deliver and beat expectations. So currently the expectations are on some recovery on margins, a strong growth in execution, and a significant improvement in overall PAT. So I think the order booking has been strong, so I don't see a negative surprise coming in that. If at all, there could be some positive surprise on that. Now, orders has not been a problem for L&T, and that's something markets have recognized and rewarded it for. Now it's important for execution to come through and delivery. So I think delivering on expectations or possibly exceeding them becomes very important this time.
Okay, so that's as far as L&T goes. We will be seeing the numbers today. It's certainly going to be an action-packed week when it comes to earnings, union budget, the US FOMC outcome as well. Shivangi, let me come to you. Good morning. This is Nentara. I want to focus on certain stocks that stood out, whether vis-a-vis volumes or the price action that we saw on Friday, the bloodbath on Friday. So let me stand out. Two stocks where we saw heavy buying, so contra to the rest of the market, Tata Motors as well as Bajaj Auto. The third one I want to point out is Dixon. Once again, a new 52-week... Shivangi, let me come to you. Good morning. This is Nentara. I want to focus on certain stocks that stood out, whether vis-a-vis volumes or the price action that we saw on Friday, the bloodbath on Friday. So let me stand out. Two stocks where we saw heavy buying, so contra to the rest of the market, Tata Motors as well as Bajaj Auto. The third one I want to point out is Dixon. Once again, a new 52-week low being made. It's under pressure since earnings came out. What's your strategy for these three stocks?
So as very rightly pointed out, that auto stocks were in quite a lot of momentum and focus among which Tata Motors, Bajaj Auto, TVS Motor looks quite positive. If we talk about Tata Motors specifically, it gave a range breakout on the daily frame. Even on the weekly frame, we've seen that there is a very strong buying interest seen, and the way the stock has come out with a surge in price volume, it is expected to move upwards. The good part is that the auto stocks have remained resilient despite the market weakness, and we could see an upside towards 460 plus levels over here with a support near 436 levels. Now, talking about Dixon Technology, we've seen that even in there has been some sort of a weakness which was prevailing since a very long time, and there could be some sort of more downside which is expected here because of the huge short build up that we've seen here. So we could expect a little more pain over here.
Sandeep, I know it's turning out to be a bit of a non-event, but given that we're stepping in a little bit light now, thanks to all that's transpired, at least with the Adani group of names and the overall market correction as well, ahead of the budget, wanted to understand whether there is any pre-budget positioning that you would recommend, any individual stocks.
Not really, Sonali, simply because of the fact that no one knows what's going to come out. So I think all this speculation around the budget, what will come out and all, ultimately what comes out, no one knows. So I don't traditionally believe in this sort of pre-budget positioning, etc. But overall, like you rightly said, it's going very light. Emerging market index X of India, Asia Pacific is up 11% already in January. We are down 3%. So it's a 14% underperformance, which wipes out virtually all the outperformance we had of last year. So we are light. Growth prospects are fine. Valuations have become much more reasonable. So I think this event will also pass around the Adani group, and eventually I think it should be okay.
Sandeep, what I also wanted to ask you was that, it's of course a big week that we have to watch out, from earnings to Nirmala Sitharaman's budget speech to the FOMC outcome. But when was the last time that you would say that you've seen this kind of a sell-off headed into union budget? Because whichever way you look at it, this is a budget week where you've seen going into it, banks come under pressure, Bank Nifty holding on to 40,000 for now. Even if you look at the frontline indices, can this not be seen as an opportunity? I know you like to think longer term, but just as someone who's been tracking the markets.
Yeah, I think, but we don't know what's going to come out of the budget. So if they make some irrational move around actually hiking the long-term capital gain tax, it reduces the return potential of equity, and in a fragile sentiment, it impacts the sentiment much more. Or some other moves which could be seen as market unfriendly. So frankly, I don't know, and it's just 2 days to go. But overall, the impact of budget on markets, if at all, has been fleeting. Like it lasts for a week or 2 weeks. So people have to take calls beyond that. So if someone's, let's say, sitting on cash, do I say that you put all your money in today? No. I would say that markets have become reasonable. Some companies are attractive. So you put half of it now, wait out what the budget says, and then invest it.
Okay, fair point. That's a sound piece of advice is always coming in from Sandeep Sabharwal. Sandeep, great to have you on the show as always. We'll see you on budget day. We'll let you go on that note. Let's just revisit what the pre-open rates are indicating, because it seems like it's going to be once again a quiet start. At least it's not a plunge that we've been used to seeing last week on Thursday, Friday. But yes, after a quiet start, the Nifty has immediately slipped into the red. We're down about almost 0.5% right now. I just want to quickly see what the Adani names are up to and whether there's any respite coming in. Let's bring up Adani Enterprises, wherein the FPO closes tomorrow. That stock has finally at least managed to arrest the fall. 2801 is where Adani Enterprises is, but these are just the pre-open rates. We're going to wait by and see what the normal trading actually throws up at us. But Shivangi, let's shift focus to mid-caps. Any mid-cap ideas that you may have for our viewers?
So on my radar is AIA Engineering, which has negated its lower highs formation of the last 6 weeks, and there has been a price volume surge over here despite the weakness in the broader market. It recently closed and above its 50-day exponential moving average, and even on the daily frame, if we look at it, buying can be seen at every declines, and supports are gradually shifting higher. So recommending a buy over here with a target of around 2700 levels with a stop near 2550.
Rish, what about you? Coming to you now for your stock-specific ideas from the broader markets.
So taking a big contra bet on RBL Bank. Now, if you look at the stock has corrected from a high of 185 to 190 almost just start of January, and has corrected down to 150, almost a 20% plus correction from the stock. And the stock is now back to the same prices where it broke out and made a last previous bottom around that 150 to 145 mark. That was the breakout point also for the stock from where the rally started. So this is a good contra trade in the mid-cap banking space, as corrected 20% plus, and this is a stock which is now back to the prices where it was almost a year back, and this was a cluster zone, cluster breakout from here. So out here it's a buy, a good risk reward trade, a stop loss at 140, expecting to bounce back to 180.
Right, fair point. Those are some mid-cap ideas coming your way, but it's that time on the show when we get you the budget cover, and this year's budget will focus on agricultural revolution over the next decade. In fact, ET now has learned from our sources that budget may announce incentives for new technologies and innovations, R&D, and for agri-tech entrepreneurs to make farmers future ready. Prakash Priyadarshi, my colleague, has more details. Prakash?
Yes, agriculture sector may see some big announcement in upcoming budget. Government may make some announcements related to technology, R&D support and investment through PPP mode in agriculture sector. Incentives may be announced for new technology in agri sector, including PLI scheme for food and processing units. We are also given to understand that diversification of agriculture may be promoted in a mission mode. Sources are also informing that the amount under PM Kisan Saman Nidhi Yojana may be increased to rupees 8,000 from 6,000 per annum. Spending on rural infra like roads, houses, sanitation, water supply may be increased. Fund allocation under PM Awas Yojana rural may be increased to allocate remaining 85 lakh houses in rural areas. Financial support may be given to increase millet production and setting up of infrastructure going forward. Apart from that, fund allocation under Manrega scheme may be enhanced to rupees 1 lakh crore to increase demand in rural areas.
Many people think that budget is no more relevant. I am of this opinion that even if you are not allowed to fire the crackers, it does not diminish the spirit of Diwali celebration. Let's join on 1st February with me, Vijay Kedia, on ET Now to celebrate Diwali of stock market, Union Budget. See you.
Okay, in the meantime, let's tell you what else is making news outside the world of markets. And the government has called for an all-party meeting ahead of the budget session in the parliament. During the meeting, the government is expected to seek cooperation from all parties for the smooth running of parliament. In fact, Finance Minister Nirmala Sitharaman will be presenting the union budget, remember, on February 1st, as always. And the Indian diaspora is holding a nationwide protest against the BBC in the UK. Indians are holding silent protests in front of the BBC offices in Birmingham, Manchester, Glasgow and Newcastle against its documentary on Narendra Modi. Also, China has basked in festive hustle and bustle as people celebrated the Lunar New Year of the rabbit with strong consumer sentiment. During the week-long holiday, which ended last Friday, sales revenues of China's consumption-related sectors shot up a good 12.25% from last year's Spring Festival holiday. And in a one-sided final, Novak Djokovic beat his Greek opponent to win his 10th Australian Open. With this, Djokovic has matched the tally of 22 Grand Slams, with Rafael Nadal as the highest Grand Slam record holder. He also returns to the world #1 spot for the first time since June. And also some good news. India managed to beat New Zealand by 6 wickets in the second T20 to level the 3-match series in Lucknow, chasing a paltry target of 100. The men in blue would now hope to win the match, or next one, in fact, to clinch the series. And Indian women beat England women by 7 wickets to be crowned winners of the inaugural Women's Under-19 T20 World Cup. Indian pacer Tita Sadhu was adjudged the player of the match.
Okay, that's all of the news outside the stock markets, and of course a wrap of the sports news as well. Here's hoping Rafael Nadal can stop Novak Djokovic at the French Open. Well, back to the markets now. And Naresh, let me come to you. You've told our viewers what to do with the indices, but my specific question also, and you've touched upon it a bit, but in detail, what should one do with the bank Nifty when it's hovering around the 40,000 like levels? And if you were to see the bank PSU index, that was down 5% during the bloodbath on Friday.
So in terms of bank, what we are seeing is we've seen a good enough correction in the banking space. Now the price point is basically, if we go back to the, say, mark of 38,000 to 39,500, that's a strong support area. In terms of a similar level where the rally started from was 39,500, similar to what is 17,300 to 500 band. 39,500 is the band for Bank Nifty, and that is a price point where you want to be a buyer rather than a seller. It would get oversold at this gap down which it is opening. So the view is time to go into some of the large cap banking space, which have seen a strong correction. SBI and ICICI, which were earlier say leaders, which have corrected quite a bit now and now become a case for buying. So I would go with the SBI and ICICI, and even the Bank Nifty at 39,500. The only case with Bank Nifty is one has to be ready for the next 3 days of volatility. We have budget around the corner. But if somebody is looking at it as an investment position, it's a clean buy across the board in the large cap banking space.
Well, guys, I want to look at Adani group of stocks where they are. The management is confident the FPO will go through, but there is no recovery whatsoever. Stocks are still down 10 to 11%. Adani Gas down 16%. Adani Transmission down 11%. Adani Power, I think 5% should be the permissible limit. Adani Wilmar would also be down. And Adani Enterprises up only 88 rupees, even though the management has clarified that the entire FPO will sail through. Ambuja Cement may see a bounce because the management has clarified that there is no promoter. Ambuja shares are not pledged. That was the fear in the market, that the Ambuja and ACC stocks were pledged, and if there's a collateral call there, these stocks could plunge a bit more. But frankly, the center of the universe cannot be Adani group of stocks. There is budget this week, there is FOMC, and there are earnings. So in terms of the pecking order, I think once these stocks settle down, today, tomorrow, next week, Adani group of stocks will settle down. Markets will move on. Markets will, later in the second half of the day, we'll start talking about what to expect from budget, whether it is the LTCG tenure change or the short-term rate change. Then markets, once budget is over, on 1st, you got FOMC. And this is the first big meeting after the global US data is showing signs of, at least inflation is showing signs of topping out. So that, and again, in a sense, is going to be an important FOMC, important event to reckon with. And then you got the overlay of L&T numbers today, State Bank of India later this week. A lot of earnings are still left, and that also will set the tone of how individual stocks would move. So calling out the market, at least this week, may not be a very easy proposition, because you will see two-way swings. You will see big spikes and big falls and big rallies. I will not be surprised that this week, which is the most important week, could also be one of the most volatile week in this calendar year, given the underlying bent of the market technicals, the news flow, and the budget event. First rates, you got to start with the Sensex and the Nifty. It's not a bloodbath, so to speak. We are showing signs of stability, at least on benchmark indices. The market breadth is not showing any signs of real comeback. 0.25% down, little over 0.25% down for the large cap index, that is the Sensex, and ditto for the Nifty as well. The small cap index also is off to a flat start. Now, Adani group of stocks. What do we have there? Adani Enterprises, Adani Port. Let's look at it, guys. Adani Enterprises bouncing back, Adani Port bouncing back, Adani Power lockdown. I think it's the 5% is the permissible number there. Adani Transmission 14% down, Adani Green 17% down, Ambuja and ACC, Adani Gas 17% down, Adani Wilmar 5% down. Ambuja and ACC, please. Ambuja is up 5%, ACC is up 1.5%. So Ambuja, that clarification which has come out that Ambuja shares are not pledged, that I think is helping the stock to jump back. But for other group of stocks, which is Adani Transmission, Adani Power, Adani Grid, Adani Wilmar, the downward spiral continues. Bad has got worse, and worse has become ugly for Adani group of stocks.
Yeah, absolutely. There doesn't seem like any respite in sight, except Ambuja, of course, which is seeing a huge spike up coming in. Also, let's check in on what else is happening. You know, the big movers and the saving grace is really from Friday's trading session. That was Tata Motors and Bajaj Auto. So just want to see whether there's any follow-through coming in for Tata Motors or not. That stock will just come up for you on your screens next. And then, of course, you know, besides that, there is a whole host of other stocks as well which should be reacting to their numbers. Let's check in on what Bajaj Finance, for instance, is up to and how that stock is holding up. Bajaj Finance will just come up for you on your screens next. And then, of course, you know, while the Adani group of stocks haven't seen any resurrection per se, but you are seeing Vedanta. That as well is one stock which is in focus right now. There's NTPC, wherein the gross generation is coming higher by nearly about 4% on a year-on-year estimate. The Q3 numbers have managed to beat the estimates. NTPC holding up 1% as we speak. There's also Vedanta, wherein the Q3 results have come in above estimates. We just highlighted that for you. And the aluminum business EBITDA has come in higher by 26.7% on a sequential basis. The stock is a little bit soft though. Vedant Fashions, this is an interesting one. Just want to bring it up for you because revenues have come in higher by about 15%. EBITDA has jumped up 14%. Vedant Fashions, a very highly HNI concentrated stock that holds up about almost 0.5% or so in trade. BEL, the numbers have been a little bit disappointing. Kajaria Ceramics, Aarti Drugs, wherein the profits have crashed about 40%. These are all the disappointing names. But yes, Tata Motors has also hiked their passenger vehicle prices by an average of 1.25% across the board. Tata Motors has arrested that rally from Friday. The stock is now floating around the 445 mark. While we're at it, I also want to check in on what an ITC, what a DRL and a Ashok Leyland, the big movers from Friday, are up to. ITC, I don't think the first rates have kicked in there yet. Dr. Reddy starts off flat, and Ashok Leyland is the other one, which will just come up for you on your screens. But Adani Enterprises, a big recovery in that stock, holding up 6.25% as we speak. And yes, Adani Ports as well now higher by about almost 4% as we speak. Adani Enterprises now spikes up even further, 7.5% higher for Adani Enterprises. The Nifty though, that's struggling, 17,454 now. Naresh on the index. What next as the range for the Nifty, Naresh?
Band of 17,300 to 17,500 is a strong band of support. I would expect volatility to continue for the next 2-3 sessions, but post budget, I would expect a much sharper up move. We should be back to 17,800 to 18,000. That is the view. So volatility could continue, but this is a time to accumulate stocks across the large cap basket.
Right, let's get your first trade going as well, Naresh.
So that would be a buy on SBI. The stock has corrected from 620 all the way down to 540 to 530. This is the place where it was a year and a half back. So this is a good entry point for the short term. So expecting this to bounce back from here on.
As well, let's get in your views. What's your first trade this morning? Shivangi, if my audio is reaching you, your first trade in the markets this morning and your view on the index?
Yes, absolutely. So the index view remains intact, which is sell on bound strategy to be applied in both Nifty and Bank Nifty. We could see weakness towards 17,350 zones in Nifty. And talking about the first trade, my eyes are on TVS Motor. It has retested its breakout on weekly chart, and it is inching higher. It has negated its lower highs, lower lows formation of the last 3 weeks, and it formed a very strong bullish engulfing candle the previous week, and buying is visible across auto index despite the market weakness. So recommending a buy over here with a target of around 1090 and a stop near 1030 levels.
Punita Kumar Sinha, managing partner with Pacific Paradigm Advisor, joins us. Let's take our conversation with her forward. Punita, good morning. Thank you for joining us. For a market which was gliding, for a market which was chugging along very smartly, a lot has changed in last 2 weeks. Selling an Adani group of companies, concerns around macro, and if that was not enough, suddenly brokerages are calling this market expensive when they feel that Indian markets are trading above their mean average, which means it needs to correct. Is there a change in the market mood and the momentum?
I wouldn't say there's a structural change. There may be short-term change because structurally, I think India still looks very good from a long-term perspective, from a macro stability perspective. Of course, we have two big events this week. So any predictions that one makes right now can easily be negated by anything that happens in the budget on the first or with the Fed. So it's really hard to make a prediction at a time when we have such big events that are going to set the course for the next several months of market performance. But in general, I would say that if you look at debt to GDP, if you look at inflation, if you look at real rates, India is actually looking pretty good compared to the other markets. But yes, on valuations, India is looking expensive. Firstly, because India has outperformed last year, and it is trading at higher. It's trading at a higher premium than historic averages, both to emerging markets and to the rest of the world.
There are two scenarios which are coming up ahead of the budget, purely from a market standpoint, and that's all about taxes. I'll construct both the cases. First, what if the underlying tax structure for LTCG and STCGs change? What happens to market in that scenario? Second scenario, the rates are not changed, the tenure is changed. So what happens to market in the second scenario?
So, I think, of course, from an LTCG perspective or any short-term tax perspective, if there is any rise, then obviously that would impact the market negatively in the short term. Not because it is a wrong move, because the rest of the world short term is taxed at the income tax rate. So India is actually lower than that right now. So if they want to rationalize it to global peers, then it wouldn't be a wrong move, but the markets obviously are not going to like it. And then the same thing for the long-term capital gains as well. Nobody in India likes to pay taxes. And versus Asia, India's tax regime isn't great. But versus developed markets, Europe, US, India's tax rates are pretty benign.
Okay. So what has been your fund philosophy, and what has been your positioning? Let's say, what was your positioning a quarter ago and what is your positioning now? And given that we've seen more like a shakeout in the market, if I may use the word, Hindi word, Samudra Manthan, we've seen a Manthan in the market. Where are you picking your spots?
So see, I think the China reopening trade is playing a big factor in everybody's thinking, especially foreign investors, because China is definitely, valuations are very attractive. Same thing in Taiwan, Korea, and some of the other Asian markets. And in general, I would say emerging markets are looking good compared to the developed markets, particularly the US, on valuations. So we are in an environment where value is still likely to outperform growth. And there is a lot of value in the rest of the world compared to India. India, there is value, obviously, in pockets, but there is more value to be found in the other markets. So foreign investors with the reopening of China are clearly looking to add back to China. Of course, there is a fear and that a risk of China has gone up because of what has happened politically as well as economically and with COVID. So India is obviously, from a long-term perspective, the companies are still, global companies are still seeing India as a better source of growth. And also they want to add more and more capacity in India. So I think you can't ignore India. Yes, the valuations are high, but the incremental flows and some rotation out of India is definitely happening. And we are also finding that there is, more value in China at the moment.
Puneeta, hi, morning. When we're looking very closely at the budget, there seems to be a lot of thrust this time expected, in particular on the infrastructure space, on the rails, roads, ports, as well as on what could potentially emerge as a big booster for the defense space as a whole. What is it that you're working with in terms of expectations, and do you believe that the capex theme should be a strong play in the portfolio?
Yes, I absolutely think so. I mean, first of all, in a higher inflation environment, infrastructure and real estate are generally considered good assets to be in. In fact, on some of the investment committees that I chair of other funds, we have been looking to add infrastructure funds. And this is, I'm talking global, I'm not talking India, and add to real estate funds as well. So, and I think globally, that is a trend that plays out well. And in India in particular, given that a lot of the global companies want to add more capacity, there is going to be need for more capex. And so I think both the inflation environment and the fact that both the private sector and perhaps the government will continue to focus on infrastructure, capex related companies should benefit from these trends. These are longer term trends. Of course, as you know, capex doesn't happen overnight, and these are long gestation projects. And when this kind of a scenario plays out, obviously financials also benefit because credit growth also picks up. So I think as a result, I think both the capex sensitives, infrastructure, real estate, as well as financials should see growth opportunities.
That's how you want to play the capex cycle. But Puneeta, good morning. Nantara also joining in. You talk about how you want to add names from around the world, and it's a theme that you're big on. But the other way to play this is through banks. Last year, what we saw was the comeback of the banking stocks, right? It was certainly not like that at the start of the year, but look at the strong way the banks ended the year. Going into the big event of union budget, there's very high expectations. Indian banks have never looked better. You've got the PSU banks also, which are now looking better. The valuations are going up. What's your strategy here, especially ahead of budget?
So, I mean, we are definitely overweight banks. And of course, there could be some rotation from the higher valued banks. I mean, we have a lot of banks to choose from to invest in India. So there is a big disparity always in valuations. And that links itself to obviously quality and confidence. And so one definitely can, there might be rotation from, banks, one bank to the other, but banking as a space looks good. Of course, there is, if you look at estimates, there is the credit growth has been strong, but some are forecasting while credit growth to still be strong, but slower than what it has been. A lot depends on what also happens in the budget, also what happens with the Fed meet. But I think, as I said, that if in general, the longer term trends support capex in India. We are going to get capacity constrained pretty quickly if a lot of the companies, particularly the multinationals, are continuing to expand in India. And we've not had that kind of aggressive expansion in a while. And a lot of companies are reaching capacity utilization rates that need them to rethink their capacity expansion plans. So I think definitely we are going to see that regardless what happens in the budget, because that's a longer term trend that is required for India to keep growing.
There's a lot of speculation in the market whether or not there's going to be any tampering with rate neutralization, or tenure or quantum or whatever it may be. Just wanted to understand what is your own thought on an LTCG or STCG, etc., and whether or not there is any case, considering tax collections are buoyant, and we've seen in the past as to how 2022 India has been the favor of most markets across the globe, and we've been an outperformer, barring, of course, the month-to-date aberration that we've had.
Well, I don't see particular need for any change in the tax regime, other than the fact that, globally, as I mentioned, US and some of the other markets, the rates are a lot higher than what they are in India. So if the government has some plans to invest somewhere else and they need to garner more resources, then this is a place where they could easily think of, given that we are below a lot of global markets in terms of our capital gains rates. So that's the only reason I would see them wanting to do that, is to use the money for some other projects or other allocations in the budget.
When it comes to the IT space, how do you see those emerging? How have you read into the kind of quarterly numbers as well as the kind of commentary that some of the IT majors have doled out this quarter?
I mean, the commentary has been good, positive, more positive than I had expected. And, it's whenever the inflation is high and costs in the US are really quite high. In fact, I'm hearing that even not just technology, in many, many areas, people are outsourcing more to India, even in the, a simple thing like accounting. There's a lot of accounting and financial functions that are being outsourced to India because the wages have really gone up there. And similarly for technology, there are layoffs that are happening globally. And to the extent that they can outsource some of those functions to India at cheaper rates, that trend might continue. Valuations of IT stocks have obviously over the last year corrected to some extent. Now, IT, which was generally considered in the past a growth sector, I think now is more in the value camp, because the dividend yields, these companies are generating a lot of cash. Dividend yields are pretty good. There's stock buybacks that happen as well. And the growth trends are, stable. They're not the high growth companies that they were 10 years ago, but the growth rates are stable and decent. And the secular trend is still there. So as I said, I think at the moment, the focus has been more to be in names that are attractively valued, because there is risk, there are still risks in the markets globally. And so one shouldn't be really rushing to buy growth names. And technology is an interesting, IT is an interesting sector that has stable growth and decent valuations at the moment. So I think one should always have some exposure to Indian IT.
Puneeta, that's all the time we have for today. Many thanks for joining us. There's, of course, a big week from earnings to union budget to the outcome of FOMC and all the drama that we've seen unfold as far as the Adani group of stocks also go. And just a quick word on that as we head into a commercial break. What a recovery that we started to see, not for the indices, but also for the entire Adani group. If you look at Adani Enterprises hitting an upper circuit, more importantly, back above 3,000 rupees a share. Watch out for Adani Ports as well. Very, very strong bounce back when we talk about that. And the entire cement pack is also rising in trade, led primarily by Ambuja Cement, which is high by 10%, but the entire pack from an India Cement to an Ultratech also rising. It's going to be an action-packed day for the markets. So stay with us. We'll be back after this break.
Tandon joins us now. Let's take our conversation forward. Adani Group of stocks have bounced back. Markets are looking much more stable than what they are. Sandeep, make sense of the market madness. What spooked the market on Wednesday, then on Friday? Do you think it was only about Adani Group of companies and the domino effect it had on the market?
So, Nikunj, it could be a combination. If you really look at the last 1 month or so now, India has been underperforming. Okay, so whenever you see underperforming happening related to China or related to US also this time, so it's obviously hot money, the ETF money or passive fund money moves out. So that pressure we have seen in nearly last 1 month. Okay, and with that background, this event also got triggered. So we added to the fuel. So that's the way I look at. I think it was more of a event which unfolding and the background was weak. The conviction is people are generally closer to budgets. Also, people are slightly nervous. So I think it's a combination which played out rather than saying just one specific thing which played out. Obviously, that got triggered. That's the way we look at these markets.
You've had exposure in some of the Adani group of names. As an investor, given that the concerns which have been raised, are you worried or you think they would be addressed?
See, I tell you, Nikunj, I always say what is reality and what is narrative. Okay, market and is very different. I have seen these things in the past many times. Even some of the largest corporate houses, something similar has unfolded in last many years. So, one business rivalry, and other aspect is we have to look at. We don't get into any of these narrative. Our focus is pure numbers. Whether we bought these stocks at right price and whether we'll sell these stocks at right price. That's the way we define, So we had some exposure in the past in some of the names. We pruned down some of the name at some of the virtually at the top of the cycle. And some names we still own it. So I think these are the India-centric infrastructure themes which we believe should play out very well. And it is very, very unfair to say that we don't want to participate. We have seen this narrative for many times. So we are not that disturbed. This is a part of this business. Sometimes people tends to overreact. Okay, but as long we have a clarity and conviction that we are buying, holding a good names, we are not that upset or worried about it.
I'm trying to address the market, flavor here. If the FPO goes through, do you think markets will be happy and relieved when that technical factor is over? Or that is something which markets are not bothered about?
No, I think definitely, Nikunj, it is a sentiment thing. The issue has sailed through. So right now, the uncertainty is all about whether issue will sail through or not. So I think once it sails through, that event will be behind us. Okay. And again, good company name, cash flow based companies should do very well, where valuations are right. Or I think all those names should come back. Okay. So I think the event is important, and event is also unfolding closer to budgets background also, which is technically we call it non-event, but when it unfolds, people are generally cautious and worried about it.
Budget. Two scenarios. There is a change in the tax rate for long-term and short-term. That's scenario number one. Scenario number two, no change in tax rate, but the duration is changed. Long term, which is 1 year, becomes 2, or it is equated to other asset classes, which is 3. So what could be the market reaction in scenario number 1 and scenario number 2, tax and tenure?
So if let's say scenario number 1, when they hike the taxes, or with that background, market can be spooked maybe for few trading session, it can correct a bit furthermore from whatever we are at current level. But if you look at scenario number 2, where they only take the tenure, okay, then that could be just a temporary setback, and I think will come back. Okay, market will come back. So that's the way we look at. But if you really look at our own background, market has already corrected. So let's look at the background of the budget now, and let's say assuming something unwarranted builds in the prices or builds in the event form. But market is very light. Leverage position has been thrown down. People are sitting on a reasonably good amount of cash. Perception is very negative. India has seen a relatively underperformance, significant underperformance in last month. I think background is there where the dent should not be very meaningful, because if we are getting into a budget with this sort of, let's say, shock, okay, and if we have a very high leverage position, everybody is in euphoric mood, then the dent could be very, very meaningful. but the background is very different. So market is relatively light. If we look at the quant fear index, let's say last 2 days or last 3 days when this fall is unfolded in a big way, whether it has also spiked, but it has not spiked up to that extent to say a reversal, but it can settle down in next few trading sessions. So we are closer to that event. Okay. So which means downside may not be very significant from the current levels. Even let's say something which market is not anticipating or worried about in terms of taxation unfolds also. Then also market background is very light.
Sandeep, hi there. Morning. The PSU banks, without a doubt, had a pretty stellar calendar year 2022, a near 70% run up. Do you think that this is likely to continue, or now are the heydays for some of those PSU banks perhaps behind us?
So I think I always maintain that I still believe that value as a theme is still in the very early stages. Okay. Now, when value has outperformed significantly and we are seeing small correction happening there, because I always believe that no moves will be very linear. But given the background which we are looking at, the value thesis will outperform. With that background, I think PSU banks will continue to outperform in a longer term perspective, both medium and longer term perspective. But the way I will look at, I will like to avoid all the stocks where FI ownership is on a higher side, given the background which I just explained that we believe that India underperformance. I have been saying for a couple of last 2 months or so, from November onwards, India has potential to underperform China, Indonesia, and now it is even US. With that background, there might be pressure on the FI's perspective, from the outflow perspective, passive funds coming out. With that background, I will use additional data points in terms of FI ownership. Any sector or stocks, particularly which has very skewed FI ownership, I will like to avoid or like to have less exposure. Okay. But given the PSU bank, the under ownership is there within the domestic market itself. FIs hardly owns anything. If you leave top 1 or 2 names, I don't think FIs really owns PSU banks. So that way the space is actually quite good. The FI's presence is not there. So unwarranted pressure, which can get built into the outperform or the outflow from the passive fund perspective, I think that risk is also on the lower side in the PSU banks.
Good morning, and Nentar also joining in on this conversation. So you like banking stocks, particularly if there is low FII ownership. Then why did you own HDFC Bank? We started to see the elephant begin to dance as well.
Okay. So very interesting question. So let's look at, we have recently built this exposure. If you look at our fact sheet data, we actually exited from ICICI Bank in the month of September 2022 and shifted towards HDFC Bank. The reason was very simple, that ICICI Bank was trading in the most admired territory, and HDFC relative, again I'm using what on relative basis, has hit a neglected zone. So it was a good trade which worked out very well, and I think still believe that we have seen extreme negativity in HDFC Bank few months back, and that background is set for a better outperformance over other private sector bank. That's one of the reasons we own HDFC Bank.
Sandeep, I know you're not that frequent on Twitter, but one of the top trends today is LIC Zinda Hai, and it seems like you believe the same.
So I tell you, see, when people tend to make mockery of the longer institutions, and that's the way emotions, that's the reason I always bring the concept of narrative, okay, versus data. So narrative can be anything. We are not too much upset about it, but ultimately we look at data. When we look at the valuations are very attractive in some of these names, okay, we tend to participate. I always said that 2023 will be more volatile, okay. And when it's a good opportunity, when there is a capitulation, the fear is very high. That's a time to rebuild your exposure or increase your exposure, as compared to when we have seen a euphoria and people tend to participate. So you have to play very smartly this year. Given the background, we're saying it'll be more volatile than 22 also. With that background, I think I will like to play with the good amount of safety and look for additional data points, rather than just getting carried away with whatever narrative is prevailing in the market.
Thank you, Sandeep, for sharing with us your time, giving us your view on the markets, the budget, as well as your sectoral preference. By the way, just marking what's going on right now, we're at 17,637. It's a little bit of an outperformance when it comes to the broader markets. Adani Ports, as we speak, is up a solid 10% in trade. You've got Adani Enterprises as well that has seen a massive bounce back in today's trading session. And it continues to look mixed across the Adani group of stocks, Adani Gas, Adani Transmission, for instance, and even Adani Wilmar, Adani Green. Those are some of the stocks that continue to languish in trade. But let's take a very quick break right here on the show. Be right back with lots of big corporate voices. Don't go anywhere.